Hello everyone, in this video I'm going to be breaking down the first trade of the year, which was Euro GBP, and actually ended up being very nice for 7.4R in total. So this trade was broken over three smaller positions, and this is something I like to do when I have a kind of higher time frame trade. I will look for ways to scale into the position over and over again to try and maximize the profits, and then strategically manage my stop losses as well, so that if the trade turns against me, I don't end up taking huge risk. So this trade was taken from initially the 4-hour time frame, and it's made up of some kind of intuition-based trades from market experience and also very systematic setups as well. The first trade I took was 5.4R, the second was 3, and then the last was -1. So I had 8.4R in profit, -1R on the loss. So this is the premise of the trade initially. We are looking at this 4-hour time frame, and we're looking between the range of this supply and this demand. Now, what we've seen from Euro GBP is a huge rally to the upside. Then we had this structural break back to the downside here, which actually broke through and started forming these lower lows and lower highs on the way down into this demand. Okay, really quick interruption here. This student made $17,272 this month, and this student made $8,000 in December. Now, how did they do this after years of failing? Well, first of all, they found out what they were doing wrong and they changed their approach. They learned a new way to look at the market, and then they applied a strategic system, which I provided to them, to make these profits and become consistent, successful traders. I have a free training, which is 1 hour long and is going to show you why you're not winning and how you can turn your results around to hopefully help you to achieve the profits that these guys have. The link to that is in the description, so make sure you go and check that out. Let's get back to the video. After retesting demand, we had a big push to the upside, which broke this structure, and that would then lead us through into this area. And what I actually saw while I was looking at price action here was this kind of trend line liquidity. So we can see here we have 1, 2, 3, 4, 5 retests. And basically what we expect to see when we see trendline liquidity and a trend line that is actually holding up so nicely at the time with slowing momentum up here is for the market to come down, form a kind of break retest idea for sellers, then trade towards a demand area. The demand I had in mind for this trade was this area here, and then push back up and liquidate, first of all, any buyers of the trend line with this push down, and second of all, any sellers of the trend line with the trend line break kind of retest setup. So I look at trend lines in a different way to most. I'm actually looking at these from a kind of liquidity perspective, as opposed to the kind of standard break and retest or retest trade ideas. So the first trade was an intuition-based trade. Now, this is not something that is entirely systematic, and most people won't see a setup here. But those with a lot of market experience, similar to mine, may actually understand why I took this first position. So I did actually call this to my members, but I did say it was very market intuition-based. So those that didn't understand the setup obviously didn't need to go for it. But basically, the idea I had here was we'd seen momentum slowing so much. And because we had this 5 retest floor, I expected that we would at some point actually dip through this floor. So when I saw this momentum slowing down so much over on the hourly time frame, I decided this was probably a good point to just go for a short. I figured, okay, the momentum is slowing. We've started to form these kind of lower highs, obviously with no lower lows. So this is why it's a little bit of a riskier setup. But from the kind of price action we're seeing here, I figured, well, if I do sell and I put my stop loss over the high of this little structure area here, I could target down towards this kind of demand at least, and that would be quite a safe trade for me to go for. So this setup actually ended up being a 5.4R position. The exact levels probably a little bit different to this one, around there, a little bit smaller. So it was 5.4 rather than 5.48. But I just sold into this range when we saw these wicks pointing down. Now, many people would say, well, the wicks pointing down could show rejection of the sell side, right? We could see that, okay, maybe there's buying pressure coming in here. The way that I actually look at this, considering the momentum and all of the factors included, is that this basically shows us that the market is actually willing to attack the lows, but it's not willing to go any higher. So I figure here, the best case scenario is we get the 5.4R and then we can scale into some more systematic trades after a break of structure. And alternatively, the trade loses and I take a 1R loss. It's no big deal. And then I can just look for new structural changes in order to get into my position. So trade number one was simply a target down into this demand here, which is, once again, as you can see, a very heavily imbalanced demand. And I also figured, well, if we do start to break structure, I can scale in and add a new position without adding too much more risk to then take that down as well. So that was trade number one. And this actually played out relatively nicely. If we just allow that to play through, you'll see that we started to sell off pretty much immediately. And we actually came down, broke through this structural low here. And then this is where my first trade came in. So this structure level here has broken now. And if we look at it, right, we have higher high, higher low, slightly higher high. So this is the main structural point that we wanted to see broken. Now, at this point, I saw this equal high liquidity. We've actually just missed the entry because it was so sped up. But the equal high liquidity here, and then this supply zone just here, I decided to add another position to my trade. So this did actually add some risk to the setup, but it was no real big deal because of the potential on the way into the trade. So this setup was like this. My stop loss would have been just a bit bigger because in total this was a 6R move down to that level. And this trade, I was actually looking for the larger continuation towards that demand that I just marked out down there. So had this trade been successful, it would have actually been a very, very big trade of 14R. Unfortunately, as you will see, we didn't quite get all the way down there, but it still worked out to be a reasonable setup. So we swept out the liquidity, we traded into the supply, we got the entry, we put a stop loss over that high there, and then we allowed the market to run down. Now, when the market made its movement to the downside, it actually came down and fulfilled that target. So here I took my full 5.4R off this position, and I also took 3R on this position as well, because this is a 6R setup. So I closed half of this trade, and then I thought, well, I'll leave the rest to run. This trade's gone, and now we'll move this one to break even. At this point as well, having seen another break of structure, I saw potential for another short, because at this time, my bias was still short, even though we had, of course, retested demand. So I looked towards this supply here and I placed another sell order. And I placed my sell order on this one at the midpoint because the range was rather big, but the stop loss just above these wicks here. And then this was going to target all the way down. So with half of this position closed, it was possible to still make another 7R from this position and 14R from this position. So had this trade worked how I wanted it to, this would have been a 8.4 so far, plus 7 plus 14. So we'd have been looking at around 30R to start the year. Now, obviously, you can see I did hold 1% risk. I did hold another 1% risk. So overall, I did have 2% risk on this position, but it worked out quite nicely. And I did lock in the 8.4 over these two. So this one here, I was looking for obviously a huge trade. A 30% to start the year would have been lovely. But at this point, I had minimized all risk on this position. So this was now break even. And I had 1R added on here. So we have worst case scenario, 7.4R secured. Best case scenario, 30R to start the year. Okay, it's a no-brainer to kind of manage your trades well like this if you want to get the maximum profits from your positions without adding too much risk. So if we allow the market to play out from here, you will see that we did get a breakdown. This is actually where I placed the order because we'd just broken through this demand. I figured, well, at this point, there's nothing really holding us up. And as you can see just here, the short unfortunately did not work out. It got triggered in, ran very nicely, but then flipped on me and took me out for the -1R loss. Now, at the same time, I had my stop loss to break even here triggered with this push up. So then for these positions, I had a -1R, a +3R, and a +5.4R. So we have 8.4R profitable positions over these first two trades, and we have -1 on this final trade, stacking up a total of 7.4R to start the year on Euro GBP. And that is how I found these positions. So you can see I started off with an intuition-based setup. This one obviously could have been missed, and I still would have made a nice 2R over the positions that I took. If I hadn't taken that first one, I probably would have actually just taken all of the profits for this trade here at 6R, just to make sure that I'm getting something locked in to start the year, and then look for this scale in. So had I not taken this first one, you still could have locked in 5.4R overall, or 5R, sorry, by taking the 6R win and the 1R loss, just by following that systematic break of structure, retest into supply for your entries, and follow the trend down. So just to show the setup sent to my team, here is the analysis that I covered in the monthly meetup. Here's the initial trade execution sent to the group, and here's the third position and the final trade when finished. Now at this point, I decided not to take any further trades, and then this is when I led into obviously the weekly analysis, which was on Euro GBP, and that has not actually formulated any setups for us yet. Anyway, so basically that is how I locked in the first trade of the year. Nice profitable positions, intuition based to begin with, but then leading into very systematic trading. So I hope this video has provided you with a few lessons that you can profit from and learn from within your trading work. If it has, please do drop a like and make sure you subscribe because I post analysis every week, and I also post educational videos almost every week as well. I hope you enjoyed that analysis. If you did, check out this educational video to sharpen your skills trading so that you can make more profits on your own trades as well.